Hey traders, Shane from GMT Futures and FX, welcome back. Welcome back to part 4 of our multi-system trading series, and in this session I'm going to take you through how to improve your edge with money management. So we already know, based on what we've heard so far, that there is a huge advantage to trading a multi-system strategy. And what we're going to do now is we're going to take you through how we use a money management model to really accelerate the growth in our trading account using that multi-system strategy approach. So let's jump in now and have a look at how that all works. So I'm going to demonstrate to you the power of adding money management to your multi-system strategy, because typically we know from obviously previous presentations that most traders generally trade one strategy. So the obviously there's a huge disadvantage to trading one system because really it exposes you to too much risk. And when I say too much risk, what I mean by that is that once that system stops working, you're kind of stuck. You need to then go and test up another market. You need to find a market where that system's going to work. So there's obviously a lot of lost time there, opportunity. So if you have one system, like we showed you previously with CT50 Cycle Trader, it had a profit of 21,200 for last year. Its max drawdown with the 1360, but there were times during the year when that system wasn't trading. So effectively what that means is that when you're trading that strategy, you know that at some point in time that system's going to have a drawdown, and for you not to exceed your maximum drawdown, you may have to turn that system off. So what that effectively means is that there's going to be a part of the year, whether it's a month, 2 months, a couple of weeks, where you're not trading. So what we want to do is we want to really be in the market and looking at all opportunities and being able to take advantage of market conditions all the time. And with one strategy, we just really can't do that. So our model promotes a multi-system approach. So what we've put forward to you over the last 4 videos is that we look at trading multiple systems. So not just the cycle, where you're looking to buy support, sell resistance, looking for those ranging markets. We already know that the markets don't trend 100% of the time. But the important thing to remember too is that you need to have a balanced mix of systems to take advantage of obviously a diversified portfolio. So in the example we showed you in the previous video, we had CT50 Cycle Trader, T17 Cycle Trader, we had SN201 on the Euro stocks, and we had, which was a trend system, and we had SN111 on heating oil, which is trend as well. Now that mixed portfolio, that portfolio of systems, that multi-system approach, produced a massive profit of 60,000, and the drawdown, this is the key, the drawdown was only 1534 max portfolio drawdown. So a couple of $100 more and you have got $39,000 additional profit. So a couple of $100 more of risk and $39,000 worth of additional profit. So you can see the massive advantage there in just that scenario of having this multi-system approach. Your portfolio risk doesn't really increase at all. It's a couple of $100, but you've got the advantage of obviously having those additional systems bringing in that additional net profit. Now, that example we showed you there was not adding any contracts. So that was trading one contract basically for the entire period. So what happens if we add systems with money management? So that example there was no money management at all. So we weren't adding any contracts when we made money in the account, or we added profit to the account. There was absolutely no increase in contracts. That was purely based on the systems and the system performance trading one contract. Now if we add in the systems with money management, those 4 strategies we had there with money management is a massive $474,000 with money management. And I'm going to show you how that is possible using the multi-system strategy with our money management model. So we're going to jump into an example of that now. We're going to show you exactly how that is achieved by using money management. And I'll go through our spreadsheet now just to show you the method that we use. Okay traders, so I've gone to our spreadsheet. I thought it's good to do a visual example of this. So what I'm showing you now, the different methods or different models that you can use to accelerate the growth of your account. Now let's imagine that for a minute you're trading a $10,000 account, you're trading one system. That one system basically is going to have a circuit breaker, or what we call a point at which we turn that off, a max portfolio drawdown. And you can see here single money management. So this is trading one system, crude oil, and we're trading using what we call a delta ratio rate of increase. So what that effectively means is that with our systems, we typically find the max drawdown of that system. Say, for example, for crude oil, our max drawdown is around about $1,500 or $1,300, as it was in the example. So $1,300 thereabouts max drawdown. Now, what we can do is we base our delta. What we call our delta. Our delta is the value at which we increase our contracts. Now, we use a formula called the fixed ratio formula. So what effectively happens here is that for every contract you trade, you times that by your delta. So we've got 1,000 delta, and then you're adding that value to your starting balance of $10,000. So your next rate of increase as far as contracts go is $11,000. So once you hit $11,000 in your account as far as balance goes, then you're adding another contract. So basically, you go from one contract to two contracts. Then the next rate of increase would be two contracts times the delta, which is $1,000. Your current balance now is $11,000. So when you get to $13,000, you're then on three contracts. So this is how we basically increase our contract size using this delta concept. And the concept is that if your delta is the same as your max drawdown, you roughly have a fairly balanced rate of increase. If your delta is half your max drawdown, then you're being a little bit more aggressive with your rate of increase. If your delta is, say, twice as much as your drawdown, then you're being fairly conservative with your rate of increase. So that's how the delta ratio works, and really it's a method for increasing and decreasing your contracts, because obviously if you have some losses and you're at $13,000, then you'll jump back down to two contracts. So it basically works that way. Now the advantage with this strategy is that the advantage with the fixed ratio method of money management is that it really does accelerate that growth in your account, because you're not waiting, as we're seeing with the fixed fraction method, you're not waiting for a percentage increase. So say for example my risk on this account is $200, and I'm going to risk 1%. So 1% of $10,000 is $100. So I'm not actually going to be able to take a trade here because I'm breaching my mandate. But if I'm prepared to risk $200, then I can take a trade, because 2% of $10,000 is $200. So I can trade one contract. Now the trouble is though, for me to trade two contracts, I need to have $20,000 in the account. So you can see that for me to get $20,000, I've got to double my account using the fixed fractional method. Whereas with this fixed ratio method, it's much easier for me, because I'm adding another contract at 13,000, then 16, then 20, then 25. So you can see that the rate of increase is much better. And obviously I can determine my rate of increase. I can either increase the speed at which I increase my contracts or decrease them based on my delta. So that's one method, the single market money management. But as I mentioned before, you can see from the videos that we've shown already that there's a massive advantage to having multiple systems, because what multiple systems do is they help improve that max drawdown, don't they? So already, if I add two systems here, my max drawdown, like I did in the example earlier, my max drawdown went from $1,300 to $1,500, and my profit almost doubled. So what that effectively means is that I'm going to be adding contracts at a much faster rate. So then if I go to adding systems with each market increase, so there's another method we can do here. Instead of adding contracts, because let's say for example that you are trading markets that are less liquid but have fantastic opportunity and fantastic profit in the market, but they typically may tap out at about 10 or 20 contracts. If you start using this rate of increase for contracts, you're going to find you hit your ceiling fairly quickly. However, if you start adding systems with each rate of increase, what you're effectively doing, as we showed you in that model, is you're basically, every system you add, your goal is to reduce your max drawdown and increase your net profit. Let's have a look at the portfolio again to see how that works. So traders, I've got our portfolio up. As you can see, our goal is to keep that portfolio drawdown as low as possible. So every time I turn another system on, I'm adding profit into this portfolio, and my goal is to keep that max drawdown to below 2,000. So let's do this. Let's add another system. So let's say, for example, we have got at the moment we've got 3, 4, 5 systems trading. Now, if we go back to our other tab here, we go back to our tab. Let's say we've got 5 systems trading. So here's our 5 strategies. So basically we've gone from 20 to 25,000. We're at 6 contracts. So we're adding in another system. So this effectively means that we're looking for 6 systems to trade. So we go back to our portfolio tab here, and we have 5 systems trading at the moment. So our goal now is to add another system that is going to keep this max portfolio drawdown as low as possible. So let's put the Russell in here and see if we get that balance right. So just over 2.2, not happy with that, so we'll just scale that back and we'll add another system in. We'll see what the 71,000 will add in another strategy, CT76, a cycle trader strategy. And perfect. So we add $5,000 worth of profit, and you can see there that our system correlation is low. You can see the below the zero line is making sure that systems aren't heavily correlated to having strong losing days. So you can see there that we haven't got that correlation. But we've got some really good winning days, so the systems are well correlated here. Our drawdown's still at 17.95, so we're in a good place. We've got 6 systems trading. So then we're waiting for that profit to actually go to the next level. So we go back to our strategy here. Once we hit 25k, we're on 6 systems. So once we get to 31k, we're then trading 7 strategies. So we can add another system in at 31k. Above 31, and we'll go back to our strategy. So we still want to add another system in here, and we want to make sure that we get a strategy that isn't going to increase that portfolio drawdown. Perfect. So we added in gold. It took the drawdown up to 18.13. Still, we're still really well correlated. So our profit now is at 85,000. So we are looking very good as far as adding systems. Now this is one way you can do, obviously you can increase your portfolio by having the multi-system approach, but where the real growth comes is this geometric growth. So if we go back to our tab here, and you can see now we're looking for 7 systems. So we're now on 7 systems. Once we get over 38, we're going to 8 systems. So let's go to 8 systems. And again, we need to kind of try to get this so we've got 3, 4, 5, 6, 7. We need one more strategy to get us to where we need to go, to 8 systems, hopefully, and it's just at 2,000. So, look, I'm happy with that. We've got $89,000 worth of profit. We've got $2,000 worth of risk, so we're just on the cusp there. We're trading 8 strategies, so we've almost got our magic 12 strategies firing. Now, if we add in some of these other systems, we need to make sure that they stay under that $2,000 mark for our max drawdown. So let's see if we can do that. Perfect. We added in CSN 120. It's pushed our profit up to 97,000, and we've still got a max drawdown of 20,000. So you can see the massive value of adding in these systems and improving the diversification of your portfolio if you get the systems right. So you've got to be able to identify what systems are going to obviously work well together in your portfolio. So let's now jump back and have a look at another method that we can use, and this is really where the gold is, because we know that we can add systems, but we can also add contracts, which obviously improves our performance. But where the magic is when we've added our systems in, we've got our 10 systems in or our 12 systems in, and we start adding in money management, adding in our delta. So what I've done here is I've selected a delta of 3,000. Now, our max portfolio risk is $2,000. So I'm being a bit conservative, aren't I? If I have a delta of 3,000, I'm being very conservative. And what I'm doing is I'm trading, so traders, I'm trading 12 systems here. So we've got all 12 systems running. You can see crude, Russell, DAX, Euro, US dollar, Euro bond, Euro, Yen, S&P, wheat on multiple, 12 systems on multiple markets. And what I'm doing now is I've used a delta of $3,000. That's my delta rate of increase. So 12 systems running. My starting portfolio is 100k. So I've got a max drawdown of 1,500 there. In the example, we were using $2,000, so we can change that to $2,000. So that'll change our stats slightly. But we've got a $2,000, so we're being a little bit more conservative on the money management aspect, but that's okay. And what we're doing now is that every time we trade, each one of these systems gets one contract. So we start out with 100k, we give each system one contract to trade, and then so basically we're starting off with 12 contracts. So one contract per market. How much slippage are we going to get there? Very, very little. So what that means is that our first rate of increase is $103,000. Now, once we get to that $103,000 mark, then we're adding a second contract. Now, because we have these systems perfectly correlated, the max drawdown is very low, we've got the potential here to really accelerate our growth using this money management model. And what we're doing is we're quantifying the risk, but we're also, as well, we're making sure that we manage the systems individually as well. We're making sure that each system we trade is a high performance system, that we're managing those individually. So for those systems to be in our portfolio of 12, they have to be very good strategies that are performing at their optimal rate. Now, if they start to drop off, if any one of these systems drops off, you then would substitute that system for another strategy. Now, it's exactly like being the manager of a football team, a basketball team. If you have a player that isn't performing in the team, you're going to bench them, aren't you? And bring on a player that's performing much better. So the same applies to our system management. So this is why this works so well. You're looking for systems that work well together, they're cohesive, they work well as a team, and your goal is then to start adding in this money management formula and start getting that geometric growth that we talk about. And this is why when you have a good combination of strategies together, that you can achieve this geometric growth, because you've got systems that have a very low drawdown but have huge profit potential. You saw in our previous example, just on our portfolio with no money management. So basically, if we run this strategy with no money management, we're trading one contract, we're making $97,000 on a $100,000 account, trading our systems with a max drawdown of $2,000. That is phenomenal. So our net profit to our max drawdown, that ratio is 47.66. That is phenomenal. So really what we want to do now is we want to add in money management. So let's have a look at how this strategy would look with money management added to it. So traders, here it is here. This first line is obviously I've only got a couple of systems loaded up here. I think I've got 4 strategies loaded up here. So if I was trading 4 systems, which would be probably a 40 or 50k account, that would produce on a 50k account, that would produce $59,000 with our 4 systems. And we would basically, I think I've got 4 systems, T17, CT50, we've got a trending strategy and another trending strategy there. So producing good profit, a profit of 59,000. But when we add in money management, so that delta I spoke to you about, I've nominated a delta of $1,000. So if I nominate a delta of $1,000, I'm being slightly more aggressive. I could change that to, say, for example, $2,000. So if I make that a $2,000 delta, obviously my money management's going to drop down because I'm not going to make as much because it's going to be a slower rate of increase. But you can see that I'm being more conservative. But look at my growth. This is trading one contract. This is using our fixed ratio rate of increase with multiple contracts, adding contracts. Every time we get a rate of increase, we add a contract. So what that effectively means is that every time we get to our point of, so at $2,000 obviously, there's our second contract added to all systems. And what that effectively does is that really accelerates our growth on our strategy, because we know that we're not going to have a lot of losing days or losing weeks, because our portfolio is so well balanced. So one helps the other. Now, this is the power of this multi-system strategy with money management. Even if I was ultra conservative and used double my delta as my rate of increase, I'm still making 297,000 based on that. And you can see the difference in the equity graphs. It's phenomenal. So traders, you can see the power of this multi-system strategy with money management. It is really something that you need to spend a little bit of time on. Obviously, as part of our program, we are not only training you in how to use the systems, but also training you in how to manage your risk and how to manage your money and how to get that geometric growth as part of your portfolio. So it's very, very exciting stuff. And this is what I wanted to share with you today. It's phenomenal in relation to the growth that you can get in these accounts. So traders, let's have a look at the challenges and opportunities. The challenge is that the opportunity obviously is that we want to create wealth through trading. That's our number one goal. But the challenge is that we've got limited opportunities if we've got one strategy. It just does not work, and it takes time. So there's no offset when we hit our max drawdown on our system. So there are phenomenal opportunities, but you need to approach this in the right way. The other issues that you have is that one system won't work forever. There's no diversification. There is no portfolio hedge. It means that you don't have systems helping each other. And there's no opportunity to accelerate when you've got that one system, one strategy. So you're lacking that growth through diversified risk management. So multi-system trading with money management is the key. It accelerates the profits on your account, greater diversification, you've seen that, and there's an ability to gain much greater profits in a shorter period of time. So you can see that when you combine the right systems together, you can really minimize your risk and accelerate that geometric growth. So traders, ideally you would be trading with money management with a multi-system strategy. You can tap into exceptional growth. We've seen that with our example there. One system profit was 21, 4 systems was 60, 4 systems with money management is $474,000. The numbers are staggering. Let me show you how things would improve. Using geometric growth, you've got greater diversification, you're leveraging off your systems, you're reducing your drawdown, and ultimately you're improving your system. So you're becoming less of a slave to the market and you're managing your systems based on risk. So really, how can problems be resolved? So there's no more trading systems without knowing when to turn them off, and you're not being subjected to extended drawdowns. That is really, that's a phenomenal improvement to most of our traders find that is one of the most significant improvements. Hey traders, thank you for your time. If you'd like to get more information on how to become a multi-system trader, then all you need to do is basically wait for the next email to come out to you. That'll provide you with all the detail on how to get involved with GMT Futures and how to become part of our team. If you'd like to get in contact a little bit earlier, all you need to do is email us at info@gmtfutures.com, or you can give us a call at 617-336-00875. Have a fantastic day, and I look forward to catching you on the next update. Cheers.